Thinking about investing in real estate? Hold on a second. Before you sign any papers, you need to understand one crucial thing. Not every property is a golden ticket to wealth. In fact, many can turn into money pits if you're not careful. But here's the secret. Successful investors don't rely on luck. They're like detectives, searching for specific clues, profit signals that practically guarantee a property's value will soar. They know what to look for. And today, I'm going to share those secrets with you. If you can spot these 5 powerful signs asterisk before asterisk, you'll buy. You'll be miles ahead of the competition and on your way to building serious wealth. Ready to learn how to spot a future real estate goldmine? Let's dive in. First up, and this one is a massive giveaway, is rapid infrastructure growth. Think of infrastructure as the veins and arteries of a city. When you see new roads being paved, metro lines being laid down, airports expanding, or new schools and hospitals popping up, it's not just for show. It's a giant, flashing neon sign that the area is being primed for significant growth. Governments and major developers don't spend billions of dollars on a whim. They're investing because they've done the research and know that area is about to boom. Properties located in these developing zones are like seeds planted in fertile soil. Once these major projects are completed, it's not uncommon to see property values jump by an incredible 20 to 50%, sometimes even more. The key is to get an asterisk before asterisk the ribbon-cutting ceremonies. So, your homework is to become a bit of a local policy wonk. Go to city planning websites, read local news about urban expansion plans, and find out where the next big government projects are headed. Investing along the path of progress is one of the surest ways to see your investment appreciate. The second sign, which goes hand in hand with the first, is high demand and population growth. It's simple economics. When more people want to live in a specific area, the demand for housing goes up. And when demand outstrips supply, what happens? Prices both for buying and renting start to climb. So, where do you find these high-demand zones? Look for areas that are magnets for people. Are there new job opportunities drawing in professionals? Is a major company relocating its headquarters nearby? Is there a respected university that keeps a steady flow of students and faculty needing housing? These are all indicators of a growing population. Areas buzzing with new cafes, young families, and a vibrant community feel are often on the cusp of a property boom. A rising population means your property will be easier to sell or rent out, ensuring a steady cash flow and a higher final sale price. Always analyze the demographic trends of a neighborhood. Is it growing? Is it getting younger? Is it attracting higher income residents? The people make the place, and in real estate, they also make the profit. Now for our third signal, the arrival of upcoming commercial or business hubs. Here's a rule of thumb you can take to the bank. Where businesses go, property prices always follow. Think about it. When a new tech park, a massive shopping mall, or a cluster of corporate offices opens up, it creates a ripple effect. First, it brings jobs. Thousands of them. All those new employees need somewhere to live, and they'll want to live close to where they work to cut down on commute times. This sudden surge in housing demand from a captive audience of employees is like pouring gasoline on a fire for property values. But it doesn't stop there. These commercial centers also bring in better amenities, gyms, shops, entertainment venues, which makes the entire area more desirable to live in for everyone, not just the employees. The smartest investors get in on the ground floor. They buy properties in the surrounding residential areas. Asterisk before asterisk. The commercial boom is in full swing. They see the construction cranes for the office buildings and know that the residential price explosion is next. By the time the businesses are opening their doors, these early investors are already sitting on a pile of equity. So, keep an eye on business news and local development plans. If you hear that a major corporation or a big retail developer is eyeing a particular location, you should be too. Let's move on to the fourth sign, which might sound a bit counterintuitive at first. Low supply and controlled development. We've talked a lot about high demand, but the other side of that equation is supply. You could be in an area with growing demand, but if developers are flooding the market with thousands of new, identical apartment units, it creates a glut. This oversupply can kill your investment. Too much competition means landlords have to lower rents to attract tenants, and sellers have to drop their prices to stand out. It becomes a race to the bottom. Instead, the real gold mines are often found in areas where new construction is limited. This could be due to strict zoning laws, geographical constraints like mountains or water, or simply because it's a well-established, desirable neighborhood with very little vacant land left. This creates scarcity. When you have a limited number of properties in a place where everyone wants to live, each property becomes more valuable. Think of it like a limited edition collectible. Its rarity is a key part of its value. So, when you're scouting locations, don't just look at what's in demand. Look at the supply pipeline. Are there dozens of new high-rises going up all at once? That's a red flag. Or is it a well-planned community with a healthy, steady, and controlled rate of development? That's the sweet spot you're looking for. Scarcity drives value, so focus on areas where supply is naturally kept in check. Finally, our fifth sign is to look for consistent historical price growth. While we always say past performance is not a guarantee of future results, in real estate it's a very powerful indicator of an area's underlying strength and stability. If a neighborhood has shown steady, reliable price appreciation over the last 5 to 10 years, not a wild, speculative bubble, but a healthy upward trend, it tells you something important. It tells you that the area has strong fundamentals. It has a resilient economy, a desirable quality of life, and a history of attracting investment. This isn't about finding a place that doubled in value last year. That could be a bubble waiting to pop. It's about finding a place that has grown by a solid 5 to 8% year after year, like clockwork. This kind of consistent growth demonstrates a market that is mature and sustainable. To get the full picture, you need to combine this historical data with the other signs we've discussed. For example, if an area has a strong history of growth, ***, you see new infrastructure projects and commercial hubs on the horizon, you've likely found a top-tier investment. You're combining a proven track record with a catalyst for future growth. That's how you build confidence and minimize risk. Use property portals and local real estate reports to track historical price trends, and you'll get a much clearer picture of an area's long-term investment potential. So, let's bring it all together. Becoming a successful real estate investor is ERNA, about throwing a dart at a map and hoping for the best. It's a science. It's about knowing how to read the signs before anyone else does. Remember these 5 key signals. 1. Look for the cranes and construction crews of new infrastructure. 2. Follow the people and find areas with high population and job growth. 3. Remember that where businesses go, property values are sure to follow. 4. Seek out scarce areas with low supply and controlled development. Often see the highest appreciation. And 5. Check the history books for consistent, steady price growth as a sign of a stable market. By mastering these 5 signals, you'll stop guessing and start making strategic, intelligent, and highly profitable property investments. You'll have the confidence to know you're not just buying a house. You're securing a valuable asset for your future. Thank you so much for watching. I hope this guide helps you on your journey to becoming a savvy real estate investor. If you found this information valuable, please give this video a thumbs up and consider subscribing to the channel. For more tips on building wealth through property, hit that notification bell so you never miss an update. And if you have any questions or your own tips to share, please drop them in the comments below. I'd love to hear from you. Until next time, happy investing.